Imagine standing at the edge of a vast ocean of opportunity, where the waves are decades of potential growth. Now, picture a seasoned captain navigating these waters with unwavering confidence and a clear set of guiding stars. What if you could harness the same wisdom that has steered this captain to unparalleled success over 60 years? Today, we're diving into the mind of Warren Buffett, uncovering the timeless principles that have not only shaped his legendary investment journey but can also transform your financial future. You're about to discover the secrets that have turned a young investor into a global icon of wealth and wisdom. Are you ready to embark on a journey that could redefine your approach to investing? Let's set sail and explore the 5 enduring principles that Warren Buffett has lived by, and how they can empower you to navigate the turbulent seas of the market with the same resilience and foresight. Principle of value investing. Imagine standing at the edge of a bustling market, watching as traders hurriedly exchange goods while you calmly survey the scene. This is where Warren Buffett thrives, searching for undervalued companies with strong fundamentals, much like a seasoned shopper seeking hidden bargains. One of his most iconic investments that epitomizes this principle was in Coca-Cola during the late 1980s. At a time when the market was indifferent to the beverage giant's potential, Buffett recognized its intrinsic value, steady cash flow, global brand recognition, and a resilient business model. He bought shares at what he believed was a discount, holding onto them as their value exponentially grew. In today's rapidly evolving markets, characterized by fleeting trends and short-term gains, the patience required to identify and hold on to such value is more crucial than ever. But why is this so difficult? It's because the modern investor is bombarded with quick-fix solutions and high-frequency trading opportunities, tempting us to chase immediate returns rather than long-term value. Buffett's approach teaches us that true wealth is often compounded over time, not captured overnight. It's a lesson in discipline and foresight, reminding us that the true treasure lies in the overlooked opportunities that others dismiss too quickly. Long-term perspective. Now, let's look far into the horizon, where the distant future blends with the present. Buffett's investment strategy is not designed for quarterly reports or annual earnings, it's crafted for decades. Take Berkshire Hathaway's long-term holding of American Express as an example. In 1964, Buffett began investing in the company, recognizing its enduring value and potential for growth despite short-term fluctuations. Over the years, this patience paid off handsomely, as American Express grew into a global financial powerhouse. But maintaining such a long-term perspective is not just about patience, it requires immense psychological strength. The market is a noisy, often chaotic environment, filled with distractions that can lead even the most disciplined investor astray. How do we tune out the noise and focus on the distant goals? It's a mental exercise in resilience, a battle against the urge to act impulsively based on the latest market trends or economic reports. Buffett's approach teaches us that true financial success is not about reacting to every market shiver but rather about steadfastly believing in the fundamentals of the companies we choose. Economic moat. Picture a medieval castle surrounded by a deep, wide moat, protecting it from invaders. This is the metaphor Warren Buffett uses to describe companies with sustainable competitive advantages. One such company is See's Candies, which Buffett's Berkshire Hathaway acquired in 1972. See's had developed a loyal following and a unique brand identity that acted as its economic moat, deterring competitors and securing its profitability. Today, in the digital age, the concept of an economic moat has evolved. Companies like Amazon and Google have built their moats not just on physical assets but on intangible ones, data, network effects, and brand loyalty. These modern moats are often more challenging to identify but can lead to equally enduring advantages. How can we, as investors, recognize these new forms of competitive edges? It requires a keen eye for innovation and an understanding of how technology can create barriers to entry that are as formidable as any physical moat. Buffett's principle reminds us that investing in companies with strong, sustainable advantages can lead to long-term success, even in an ever-changing business landscape. Circle of competence. In a world drowning in information, where every piece of data seems to demand our attention, Warren Buffett advocates for a different approach, staying within your circle of competence. This principle is about understanding your areas of expertise and investing within those boundaries. Buffett's missed opportunity with technology stocks, particularly his hesitation with companies like Microsoft and Apple in their early days, serves as a poignant lesson. He recognized his lack of understanding in the tech sector and chose not to invest, a decision that, while costly in hindsight, reinforced his commitment to his circle of competence. In an era of information overload, where the temptation to venture into unfamiliar territories is ever present, how do we maintain this discipline? It's about recognizing our limitations and focusing on what we know best. This approach not only reduces risk but also enhances our ability to make informed, successful investments. Buffett's principle is a reminder that in the vast ocean of investment opportunities, it's better to be a master of a few select areas than a novice in many. Emotional discipline. Finally, let's delve into the heart of investing: emotional discipline. Warren Buffett's ability to remain calm during market downturns is legendary. During the 2008 financial crisis, while others panicked and sold off their assets, Buffett saw opportunity. He invested in companies like Goldman Sachs and Bank of America, demonstrating his unwavering belief in his principles and his ability to manage fear and greed. But why is emotional discipline so crucial? It's because our emotions can cloud our judgment, leading us to make decisions based on fear rather than reason. The ability to stay composed, to see beyond the immediate turmoil, is what separates successful investors from the rest. How can we cultivate this discipline? It starts with understanding our emotional triggers and developing strategies to counteract them. Whether it's through meditation, journaling, or simply taking a step back to reassess our decisions, emotional discipline is a skill that can be honed over time. Buffett's principle of emotional discipline is not just about investing, it's about achieving personal financial stability and peace of mind. It's a reminder that in the tumultuous world of finance, our greatest asset is often our ability to remain calm and focused, no matter the storm raging around us. In the world of investing, where trends come and go like fleeting shadows, Warren Buffett stands as a beacon of enduring wisdom. Over 6 decades, he has honed 5 timeless principles that have not only built his fortune but have also provided a roadmap for countless others seeking financial success. We've explored the principle of value investing, where patience and a keen eye for undervalued companies can yield remarkable returns. We've delved into the importance of a long-term perspective, understanding that true wealth is built over time, not overnight. We've uncovered the significance of an economic moat, identifying companies with sustainable competitive advantages that stand the test of time. We've learned from the concept of a circle of competence, the power of staying within our areas of expertise to make informed decisions. And finally, we've recognized the necessity of emotional discipline, mastering our fears and greed to navigate the tumultuous waters of the market with unwavering resolve. These principles, forged in the crucible of Buffett's experience, are not relics of the past but living, breathing strategies that can guide us today and into the future. They represent a blueprint for sustainable investment success, a beacon to illuminate our path through the ever-changing financial landscape. As you reflect on these timeless insights, consider how you can apply them to your own investment journey. Whether you're just starting out or a seasoned investor, there is wisdom here to be gleaned and put into action. Let these principles be your compass, guiding you towards financial stability and prosperity. And remember, your journey doesn't end here. Stay tuned for more insights, more stories, and more strategies to master the art of personal finance and investing. Like and subscribe to join a community dedicated to financial empowerment, and leave a comment below sharing which of Buffett's principles resonates most with you and why. Together, let's embark on this transformative journey, armed with the timeless wisdom of Warren Buffett.